Firstly, I have a brief summary of current Vietnam stock market. So, the VN Index dropped below the 1,200 point mark following the longest losing streak in the previous 10 years. Vietnam stock market entered the top 3 markets with a sharp decline in the world since the beginning of the year, despite multiple rebound sessions with such a decline in just 6 weeks. The recent decrease in the stock market in Vietnam is a reflection of the general downtrend in the global stock market, which is being caused by many factors such as rising inflation, the US Federal Reserve's tightening of monetary policy, the conflict between Ukraine and Russia, and broken supply chains. Additionally, domestic investor sentiment was negatively affected after some leaders of large corporations were arrested and regulators tightened the corporate bond market, controlled speculation, and limited real estate credit, which all had a negative impact on domestic investor sentiment. Many investors have been prompted to leave the stock market by all of these concerns. Another factor contributing to the market's rapid decline is a withdrawal of cash flow from the stock market as a result of some stocks' excessively high prices, which have become unattractive following a significant rise over the previous 2 years. The release of the mortgage obligation was caused by falling stock prices and decreased demand. It kept happening, causing investors to become fearful and gloomy, which sparked a sell-off and sent the market plummeting. The market slumped because many investors have a tendency to turn to derivatives to cut losses and even make profits. The quick rise in derivative contracts and explosive liquidity serve as evidence. Large investors can now influence the derivatives market more readily because underlying liquidity is now only 10 trillion VND to 15 trillion VND per session. They only need to utilize a specific amount of money to trade the index. It implies that significant investors could exist who wish to influence the index in order to profit from derivatives. Now we'll have some forecasts for future of Vietnam stock market. The draw for foreign capital is one of its positive aspects. Since the beginning of April 2022, international investors have net purchased up to around 5.3 trillion VND, while private investors have continued to be net sellers. Previously, from the beginning of 2020 to the end of March 2022, foreign investors net sold 82 trillion VND. The decisions of foreign investors to net purchase again on the wide scale is a key support, positively affecting the market in the context of domestic stock markets wobbling. Foreign organizations have a favorable outlook on the economy and stock market in Vietnam. Additionally, it's a good sign when international investors come back after Vietnam's stock market declines. Foreign investors still place confidence in Vietnam's stock market. The market anticipates that this capital inflow will keep attracting investors in order to keep up with the trend of encouraging investment to support economic growth and recovery in Vietnam following the COVID-19 pandemic. Aside from this positive development, we should believe that Vietnam's stock market still has great potential since the economy has a strong foundation of macroeconomic balance and inflation. Exchange rates and interest rates are not excessive and under control, and many enterprises are entering the post-COVID-19 recovery cycle with robust profit growth in the next 1 to 3 years. This is due to the fact that the Vietnam stock market has experienced a sharp decline. Furthermore, the PE of Vietnamese stock currently rarely trades for longer than 2 months with valuations below the 10-year average. In view of this, the Vietnam stock market is still appealing when compared to other markets in the region. Although there's still some uncertainty in the near future, long-term investors can expect to make profit. With an anticipated PE of 11.5 times in 2022, we could also believe that the stock market in Vietnam is trading at fair levels for long-term investment. Given that Vietnam's economy has been rapidly rebounding from the COVID-19 outbreak and that this year's GDP growth is expected to be about 6.5%, and the market can overcome negative developments in the short term and move more favorably during the remainder of 2022. It is anticipated that several of the companies listed on the Vietnamese stock market would have an average profit increase of 20% in 2022. Despite significant market changes, the State Securities Commission of Vietnam predicted that the market will rebound and expand once more in 2022 and the years that followed. However, given that the market may still see strong fluctuations, the management organization must pay special consideration to short-term solutions that will help the market regain stability and boost investor confidence.
This is investment strategy according to my risk appetite. Firstly, only invest in a business that you really understand about the business you should invest in. Before, I will need to understand about the product of business, whether that product has the potential of develop in the future or not. I will stay rational and adhere to principle that I have built when researching a business before making a decision to pay down any business. And I will realize the product and its growth potential over next 10 to 50 years to invest in. 15 years to invest in. Secondly, prioritize business with strong competitive advantage. Competitive advantage of business is very important. Priority should be given to finding and investing in business with strong competitive advantage. The reason for this, the competition between business is because the product they are trading have a very good development as well as quality in the market. And when a certain area is attractive enough, it's able to attract many business to participate. So, if you own shares of the business, the chance of making future profits will be very high and sustainable. Number 3, I really need to build a long-term investment strategy. Buying and selling stock over and over to profits from the price difference will give you very little compared to holding them for the long term. Not to mention you have to face the risk from market impact when trading short term. Okay, and don't let psychological factor like fear or influence of greed affect the criteria you set in the first place. The professor in stock market, Warren Buffett, believes that investment performance will be zero if bad deal and negative emotion overwhelm. So if you in panic situation, you shouldn't sell stocks. Thanks for listening.